Hello, this is Chris Hadley with Fairway Independent Mortgage, and welcome to our final video in our series on the 4 C's of lending for buying a home. This video is about collateral, and today I'm going to discuss what collateral is, how the condition and value of that collateral is determined, and how the different types of loans shape the rules for determining that value via an appraisal. So what is collateral? Collateral is simply the home that you are looking to purchase. The reason it is called collateral is because we use the home that you are buying as collateral to back the mortgage loan that we will do for you. The reason we do this is because if you can't pay your mortgage for some reason, we have to end up taking the home back, which is called foreclosure. No one likes to talk about foreclosure, but unfortunately, it can be a reality. Foreclosure is obviously not something we, your lender, wants to do, nor you, but we do our level best to avoid that from happening. So, let's say you're looking to buy a home for $200,000. We want to make sure that that home is worth at least that amount. So, number one, you don't pay too much. Number two, so we give you the right amount of money against that home so that we don't have problems down the road if we have to foreclose on that home and can't get our money back. In order to establish this, we will hire an appraiser to go out and look at the home and give us a value based on the local market and the home's condition. The appraiser takes into consideration the type of home you're purchasing as well. Say you're looking to purchase a 4-unit rental property. The appraiser will be required to give us information about the local rental market in addition to the market of the value of the home. If you're buying a condominium, the appraiser will need to give us some information about the condo association as well. For all homes, the appraiser will compare the home you're buying to a minimum of 3 others that have recently sold in the general area that you're buying that home and that are most similar to yours. Here at Fairway, we only do residential lending, so if you're looking for information regarding commercial lending or commercial real estate, we'll be happy to make a recommendation for you. And lastly, the type of loan you apply for can change how in-depth the appraiser looks at the condition of the home. Regardless of what type of loan you're doing, the appraiser's job is to give us an accurate market value and a decent depiction of the home's condition. Conventional loans are the least restrictive in this area, and FHA, VA, and USDA loans, we call these government loans, are much more strict when it comes to assessing a home's condition. The reason for this is these loan programs are designed to protect you, the consumer, and ensure you are buying a home that won't be unsafe or, frankly, a money pit. So they just look a bit closer and may flag items like peeling paint, steps needing handrails, cracked sidewalks, mold, mildew, and really anything that might be considered a safety or a health hazard. FHA, VA, and USDA loans may also require more in-depth inspections for a home with an on-site septic system or well, where a conventional loan typically would not require these types of inspections. This doesn't mean that a conventional loan doesn't require the appraiser to look at these things at all, or that they are better or worse than a government loan. They just don't look quite as closely at those sorts of things. Thank you very much for tuning in to our final video in this series on the 4 C's of lending. I hope you join us for our next video and continue to follow our channel.